at this stage, we're probably one of the best funded companies. So that allows us actually to continuously operate, continuously improve what we've been doing, and not just sit and wait. We're in a very fortunate situation right now.
Okay, you have built and sold to significant companies previously. But these are different times. These are very different times now. What are you going to do to ensure this thing gets over the line, and when do you think that will be?
Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, it would help if you could give us a thumbs up, as that gives us an indication as to whether this is the type of company that you would like us to spend our time, money and effort on for you. You can also leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course, what you thought of Millennial Lithium. You can also catch this as a podcast, read about it as an article or a transcription on cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And for more videos like this one, click the notification bell. We spoke earlier today to Farhad Abasov, who's the CEO of Millennial Lithium, TSX-V listed lithium developer. They have a feasibility. So they're one of the latest stage lithium companies going out there. So we talked today with Farhad about the demand story out there. Paints a very, very rosy picture. What's less rosy is the supply side. A lot of companies being shelved, going bust, or just can't raise the money at the moment in this market. We discuss why, what the implications are, and of course, you won't be surprised to hear that Farhad sees that as an opportunity for Millennial Lithium. We talk also about their current issues, which is around financing. So they are in advanced stage discussions with several options and several players. We look at that, what the implications are and the timings of that. We talk about what's going on in Argentina itself, which has been obviously struggling with COVID restrictions, but they are in quite a good mining state, and they have been able to advance things a little bit slowly, but towards some sort of conclusion around the current feasibility study optimization program. So take a look in the description below at some of the topics we discuss. Anything interesting in particular, you can click on the number beside that topic. I'll jump you to that part of the video. Otherwise, sit back and enjoy everything Farhad has to say. Farhad, how are you doing, sir?
Good. Thank you, Matt. How are you doing?
Yeah, not so bad. Not so bad. We thought we'd give you a call though. There's been a little bit of flurry in the market around battery metals companies off the back of a statement by Elon Musk about a week and a half ago about nickel, and he's starting to look towards that. So, but he, obviously he's a big fan of lithium too. So we wanted to see what's going on with you. So let's talk about that in a minute. But could you, for people new to this story, could you give me a 1 minute overview of your business? Then I'll kind of pick it up from there.
Yeah, sure, Matt. So Millennial Lithium has advanced one of its projects in South America called Pastos Grandes in Salta province of Argentina to the stage where it's ready to go into construction in the next few months. It is probably one of the most advanced lithium brine projects in the world, whereas we've completed the feasibility study. We secured the approval of our environmental permits. We've consolidated our land position, and we've been operating our pilot ponds and the liming plant, etc., for the last 18 months or so. So we're basically ready to go into the next stage, which will be the financing of full construction and, of course, a start of construction and then hitting production hopefully by 2022, early 2023.
Okay, thanks for that. One of the reasons I also wanted to speak to you was just get an idea of the macro for lithium at the moment. Like I say, in the context of this flurry around battery metals, which is going on over the last couple of weeks. So if you don't mind, let's start with the demand fundamentals. If you could share with us your thoughts on this, sort of, the short term and the long term on the demand.
Yeah, sure, man. Look, the demand picture in the long term, and long term in our language is about 3 to 5 years, is intact. In other words, it's still as strong as before COVID. If you would put this in numbers, we're talking about, on average, about 1 million tons of lithium demand by 2025. This again, average estimate, average forecast by various analysts. Obviously there are ones who are below below 1 million mark. The other ones are talking about more than 1 million tons a year. But I would say 1 million tons by 2025 is probably a safe number if we look at all the developments and all the incentives, subsidies, et cetera, that we're going to talk about momentarily. So the long-term picture hasn't changed. And if you look at the last few months and probably going forward until 2020, we'll see that, of course, COVID restrictions and all the lockdowns and all these kind of virus-related consequences have had significant impact on everything, including car sales, including EV sales. Now, if you look at lithium demand, it's right now primarily driven by electric vehicle sales, but there obviously, there's other use for lithium as well, use lithium batteries in energy storage facilities and many other applications in electronic devices, etc. But the real demand driver here, the largest, I would say, factor here is, of course, the EV sales. And the EV sales in the last, all car sales, I should say, in the last few months have fallen dramatically in some countries by 70, 80% for obvious reasons. People cannot go out. And even if they can, they're not going to rush out and buy cars in the middle of this mayhem. Having said that, if you look at the most recent data in West European countries, in North America, in China, and in Japan, I'm talking about basically post COVID restriction relaxation, period. This is basically, I would say, June, July sales data. You will see that EV sales have picked up dramatically. In some cases, they're actually even higher than the same period last year. So they're up by 70, 80% year on year, which is incredible considering all these restrictions, all these issues that we've been facing in the economy at large. So that is a very good sign of things to come. That tells us that as soon as the economies worldwide open up, as soon as the life goes back to quasi-normal, at least, the only sales, in the car sales, I say, among the different car types that will take off will be EV sales. In other words, that will be the trend that had been in place before COVID restrictions were put in place, but it looks like it will resume as soon as those restrictions are lifted. I think that's a very important factor here, the very important issue, because that is what everything else is predicated upon. How the EV sales will actually go on, how the sales will perform going forward, especially in the next few years. Now, on the demand side, I also want to talk, before we come to supply, that on the demand side, it's also very important to look at infrastructure, availability of infrastructure and the cost of that infrastructure and so forth. And it's very important to look at what the countries have been doing, again, even in the last few months, despite all these restrictions. So I'll start with charging stations, for example. So there've been tremendous efforts to actually build up infrastructure, specifically charging stations throughout the world, and especially in the countries that have obviously larger EV sales, so a larger EV availability and so forth. So if you look at China, the Chinese government announced that in the next couple of years, they're going to be installing 78,000 new charging stations throughout the country. Some of them will be actually supercharging stations and so forth. So that actually makes it easy, obviously, for EV owners. That incentivizes them, and it removes quite a bit of, I would say, pushback or obstacles or psychological barriers that some of the buyers have when they say, look, yeah, I would love to have an EV, but look, in my neighborhood, there's only one charging station, and I don't want to be wasting my time waiting for my car to be charged and so forth and so on, especially in areas where, there's really lack of houses, individual houses. Basically, we're talking about urban areas, downtown areas where people live in apartment buildings, and there are not enough charging stations. So I think the fact that China and also West Europe and North America as well, they're going to install a lot more charging station capacity will really tackle that or address that concern that a lot of potential EV buyers have had for years. So that is, I think, very important. The other thing is, again, I'm talking about all of these are recent news. I'm not talking about it, last year or even early this year. In the last couple of months, we've also seen significant announcements coming on the subsidy side. And these are, again, major EV markets. So we're talking on West Europe, we're talking North America, Canada specifically, and China and Japan. So Chinese, who originally, as you may remember, Matt, I think we touched on this last year, they decided early last year to remove all the subsidies that it had in place for a long time, for EVs, of course. And then that had, unfortunately, a very negative impact on EV sales, that the Chinese government realized that was not a very good idea. So they actually reintroduced them. And now this month, I think actually, sorry, last month in July, they announced that they're going to extend it until 2022. It is very important, especially for cars that are a bit pricier. In other words, that about $40,000, then there's actually even more substantial subsidy in China for those cars. So again, that will help EV sales, and that will boost EV sales in China. When you look at the Western picture, or the picture in Western countries, you will see that a very similar situation is developing there as well. So we're looking at Canada, that has introduced significant subsidies. In Germany has got like almost $2.5 billion in subsidies, specifically for EV sales. Altogether, I think if you look at the combination of manufacturer subsidies and the government subsidies, in some instances in Germany can get up to 9,000 euros in subsidies per car, so which is substantial, of course. And again, all of these countries have also announced that they're going to increase and expand their charging station infrastructure network. Again, going back to it, it will address a certain concern as well. Now, on top of all of this, Matt, again, continuing on the demand side, is further development of battery technologies. They're becoming more efficient. They're becoming, more efficient in terms of energy density, et cetera. And as you mentioned, of course, Tesla is in the limelight as usual, but also, Elon Musk and that, talked about nickel batteries and all of that. Again, the good thing about all of these different battery technologies is that almost all of them, 95% of them have lithium or will have lithium in them one way or another. So for our industry, I think it's very positive. Some of the elements, some of the minerals used in batteries have been either reduced or completely removed for a number of reasons. But lithium is still there. Lithium is an integral part of almost all the future technologies at this point that we know of. So that is a demand / I would say infrastructure situation.
So I think that's actually quite good and quite fulsome, and it's backing up a lot of what we're hearing from elsewhere. Again, what are some of the numbers that we've seen with regards to automotive manufacturer spending and building this new battery metal infrastructure, this ecosystem, from 300 billion to 500 billion. You pick a number somewhere in there. I'm sure you'll be safe. So the government's from around the world decision to back up the automotive industry as a big supplier, big tax revenues, big industry partners in those countries. Obviously, very, very important. But it also strikes me as that these governments taking the opportunity to get behind this whole green thematic, which seems to be really starting to build some kind of momentum for sure. But all that counts for naught if there's no supply. So the other thing we're seeing, I'm reading a lot about at the moment, is a lot of lithium companies, and I do want to talk about your company in a minute, but I just want to talk generically or macro for now, is there's some companies who are not able to get financed for simple things like pilot plants, let alone commercial operations. Some companies going bust or being indefinitely delayed. So what's going on the supply side, just given the rosy picture you've just painted on the demand side?
Yeah, it's obviously that's an important part of the equation. Just one note on what you mentioned before in terms of demand. I mean, those numbers actually kind of probably hold true. I mean, if you look at Canada, Canadian government expects that the EV business as a whole will probably reach about $152 billion of value in the next few years. So hence, all of these governments are paying special attention to the industry. So you're absolutely correct in that regard. And Canada obviously is not the largest EV market, as you can imagine. So if that's how much value they see In Canada, imagine the size of the industry in West Europe, in China, and the U.S. as well. So look, on the supply side, the situation I would say is dramatically different from what we had even a year ago. I mean, we still have oversupply situation to be kind of precise about the current situation. Having said that, a lot of future and a lot of current projects have been, as you mentioned, delayed, canceled indefinitely, put on care maintenance, or just went bust because they couldn't fund, financing, enough capital to continue and so forth. So look, I mean, the last I checked, and that was early this morning, we have about 20 projects that have been put on the back shelf. Some of them on back burner. Some of them actually completely shelved, I should say, right? So we're looking at a whole bunch of projects across the spectrum. So it's not just hard rock. We're looking at some brine projects. We're looking at some, most of them lithium carbonate projects, but a lot of hydroxide projects. All of them, all these 20, again, from Australia all the way to North America and down to South America, have been shelved or delayed for one reason or another. The reasons are multiple, Matt. I just want to maybe touch on this for a few moments. I mean, one is, of course, the market situation. As I said, there was quite a bit of oversupply, especially coming from spodumene or hard rock side. And that also caused a tremendous, I would say, overexpansion of conversion capacity in China. And that in turn led to obviously this, the slump in the price of lithium and of course the industry and so forth. Now, most of these cancellations are really caused by the fact that lithium price has declined dramatically. So we're looking at about $7,000 per ton for a battery grade lithium carbonate equivalent. So that is down almost, 70%, maybe more, from 20,000 or above that per ton in China, for example, only about a year and a half ago, 2 years ago, perhaps. Now, that was the main reason, but there are also other reasons there too. I mean, some of these companies, for example, there's a project in North America that actually started construction. They already secured funding and so forth, and construction started, in full swing. And then they found out that there was an issue with under budgeting for the whole project. So in other words, they had a huge hole that they had to fill to the tune of about $400 million. And obviously they couldn't fill that. And the whole project, got delayed, to say the least, meaning that, eventually maybe someone will come in and take over that project and try to restart it and so forth. But for now, it's been obviously put on the back burner. Now, there were a lot of other projects that were also quite advanced and they're ready to go into construction with large backing too from SQM, from Albemarle, both in South America and in Australia, again, for the same reasons. They looked at the market. They thought that, they don't want to, put even more pressure, downward pressure on lithium price by, producing more. So they decided to delay those two. And then there were others in South America, for example, and in Australia, whereas their cost structure did not allow them to proceed. Even if they could find financing, they understood that under current circumstances, it would be very difficult, if not impossible, for them to actually produce at even break even, let alone at a profit. So we're looking at least 20 projects. These are both controlled by public listed and private companies worldwide. These are advanced projects I'm talking about. Now, Matt, I want to, kind of distinguish these 20 projects from development projects that are owned by juniors and so forth. There's even more of them out there. Okay, I'm not even counting those. There are probably another 20, 30 that are struggling, and mostly because of financing issues. So we're looking at a situation where the price has come to the point where a lot of even current producers are hurting. So they're being squeezed, and we think that we're reaching probably the bottom in the next few months. We will reach the bottom because it's almost completely, inconceivable to imagine this situation going for too long, especially the demand picture, as we discussed. It holds on until, let's say, 2021, 2022, and beyond that. And if that's the case, then not only do we need all the production coming or being, online today, but we also need, as I mentioned, almost 600,000 tons of additional lithium supply coming online between now and 2025.
Okay.
So we're looking at a very interesting situation right now.
We certainly are. Can I ask a question though? Because, like I say, the demand picture says one thing. The financing on the supply side paints another picture completely. So I appreciate some of these companies have perhaps technically got it wrong and miscalculated for whatever reason, late into the project. But me as an investor, how do you think I should be viewing this? Is that picture on the supply side, this lack of finance, lack of interest in finance in lithium companies, should I be concerned? Do they know something that I don't? Or should I see this as actually, if there's a company out there, and I bet you're going to tell me you're one of them, can get things right, it's a great opportunity?
Yeah, I think, Matt, that is a critical question that all investors should ask, and I should be asking right now, because when you're absolutely right, there's a huge dichotomy there between demand and supply situation. Most importantly, the price of lithium. But at the same time, it makes a lot of sense if you kind of dissect it a bit further. When you look at the situation and you say, look, I mean, what's happening here? How come that we expect so much demand, but at the same time, there's not a lot of financing, not a lot of capital flowing into these companies. I would say one of the simplest and probably most fundamental reasons for that is the cost structure of these projects. So if a year ago, let alone 2.5 years ago, investors, I'm talking both big and individual investors, would basically throw money at all these lithium companies, today they're a lot more selective. Today they pay a lot more attention to the detail of the project itself, not only just the hype, not only a macro picture, but they want to understand the project. They want to understand technical aspects of the project, because that's what dictates the cost structure. So if you look at the whole situation, you will see that a lot of hard rock producers have very high cost structure. In other words, they produce concentrate, they ship it to China, they convert it in China. If you look at the whole thing, we're looking at probably about between $8,000 and $10,000 per ton of operating costs. At a current lithium price of $7,000 and still declining, I mean, that is not a very good, interesting proposition for any investor. So it is highly unlikely that anyone will be going into hard rock, at least in that part of the world. Now, with the brine situation, there are plenty of brine projects there, let's say in South America, in Chile, in Argentina. But again, now they're not just jumping into any brine project, they're looking at the brine project's merits. They're good projects, for example, I'm talking about development projects in Chile, but they have tremendous permitting issues. It will take years and years before they overcome these issues. So there's a real risk there. Now, if you look at Argentina, the situation with permitting in some of these Argentinian provinces is much better. However, you still have technical issues with some of these projects. So that's why they're becoming a lot more detailed in terms of their due diligence, of their understanding of the project. So if you look at the brine projects, let's stick with Argentina, for example, for instance, they will want to know what the cost structure is. They want to know whether they can actually, smart investors look at the worst case scenario. We as a management team, we always look at worst case scenario because we're the ones who are stuck with the project, so to speak, if we cannot handle the worst case situation. So the worst case scenario is that the price of lithium stays at this low level or perhaps declines even further. Can your investee company operate profitably at that level? And that, I think, is the bottom line. That is a real fundamental question that investors should be asking themselves, and then looking at the project to understand whether that particular project can actually meet that criterion or not. Because if not, then you're taking tremendous risk on, because now you're hoping that lithium price will actually spike back up to above 10,000, maybe even 13,000, 15,000 for your project to make money. So that's why I say, now you can actually, separate wheat from chaff and understand what is fluff, what is real, by looking at the fundamentals of the project, and not just technical side, not just cost structure, but also whether this project can be put into operation, whether you can permit it, whether you have all other, absolutely, important key success factors in place for this project to be profitable in the worst case scenario. So I think you will see funds flowing into the lithium industry in the next few months, but it will be really select, I would say, a handful of projects worldwide. That will again, those that can literally today operate profitably at the current lithium price. Because if you look at analysts, both from the investment community and from the industry itself, you will see that some of them are quite pessimistic. They're thinking that these low lithium prices are here to stay for quite some time. So if you go with that school of thought, then you got to make sure that whatever project you're investing in obviously can operate profitably at that level.
I agree with you on your comment with regards to fundamentals. I mean, it doesn't apply to gold, doesn't apply to silver, precious metals in general. But you guys, it really does matter. So I think I always say to people, do your homework. So let's find out a little bit about you. Okay, let's try to work out where you've got to since we last spoke a couple of months ago. When we spoke, you'd got your EIA approval, or DIA as they call it locally, which has obviously moved things forward. And I think that the kind of big ticket item that we wanted to deal with was, where are you with your financing? You were having some conversations. Has anything moved forward on that front?
Yeah, Matt. Look, I mean, we got that EIA approval almost a month and a half ago now. So since then, we actually, the two things. One, we had been in talks before EIA obviously was approved. So I wouldn't say conversation. This is a real, very intensive process that has been going on. Is still on, despite again COVID restrictions, but all the due diligence, etc., on the part of large investors and some of the strategics is still taking place. Short of actually the side visit to Salta, everything else is taking place as we actually expected. So in other words, our financing structure that called for strategic investment, investment from off-takers, and debt and some other equity investors as well. All of that is still in place, intact. But what we've seen since the EIA approval is even renewed interest from some other investors. These are, a handful of royalty streaming companies, royalty financing companies that have approached us, and they've shown interest in the project because, again, there are only a handful of projects worldwide that have been permitted to this level that we have, with the feasibility study completed and so forth, with a very large reserve base, with a proven reserve, but also proven technology that we can, use to produce lithium. So we've now actually enhanced our financing structure. So in addition to those groups that I mentioned, the strategic groups, these are large industrial groups, off-takers who are obviously ready to, buy our product and put up some capital in lieu of that. And we also had some newcomers to the table, and we think they will also be part of this overall financing structure, overall financing plan. Now, our timelines are still intact since we spoke last time. We still think that this fall we're going to have one of the major investors come into the project or the company, depending on how we structure the deal. And then on the back of it, we want to also finish and sign off on our offtake agreement. And then the rest of the financing should be finalized by the end of the year. So we've seen quite a bit of interest despite COVID, but since EIA got approved, we see now even more interest. And that, I think, makes a lot of sense. As I said, if you take this in the context of the cost structure that our project has, and then the fact that it's quite advanced, and if a potential investor still believes in lithium theme and lithium trend going forward, then of course it makes a lot of sense to approach companies like ours that can demonstrate their ability to actually develop projects.
Okay, so how long does that process take? Because that's quite a generic answer. What I'm trying to get at is, do you have a better sense of the numbers yet, or do you need to wait till people come into country and can get boots on ground and do some more rigorous testing of what you've got?
No, we have the numbers. We know what is going to happen. I mean, basically, want to stick with our feasibility study plan, whereas we'll start with 10,000 ton a year production, and then scale it up to full 24,000 tons. So the plan at this point is to actually fund the first 10,000 tons with all the associated infrastructure and everything that is required for it. And for that, we're already putting that financing plan together. So So that's why we're hoping that, by the end of the year, we'll finish all this, and early next year, we can actually start construction, which will be mostly immediately we'll start building or expanding our evaporation ponds. So yeah, no, we have very good sense of what we're expecting and when we expect all of this to come in place. Obviously, there could be some delays. The delays have already occurred because of COVID. As I mentioned, what we're talking about now should have been done actually by now, but they got delayed. But again, these were kind of objective reasons that they get delayed for. But it's still back on track in terms of actual process.
Okay, given that, is the cost of this money within the range, the threshold, which you thought it would be? I mean, maybe you haven't had those conversations yet, but are you getting indications?
Yeah, Matt, look, on the equity side, we think it will be within the range that we expected. In other words, we want to obviously to minimize dilution as much as possible. Our incentives are, linearly correlated and completely aligned with our shareholders because we meaning management, the board, we still own about 10% of the stock. So we want to make sure that, we minimize this dilution as much as possible. So we're looking at equity or quasi-equity instruments as the last piece of the puzzle. So we want to bring in substantial debt from Exim banks, from various other institutions, as well as offtakes financing through prepayments for the product. And the strategic investment that will come in, it will take probably a couple of forms. One will be direct investment, direct equity investment, either at the company level or the project level, and the other part of it will be probably in the form of debt. So ideally, would like to increase the debt proportion or debt to equity ratio to about 60-40, or maybe even 70-30, and bring down our overall capex from 450 to below 300 to start with. So in other words, what we want to do, Matt, is to get to production with 10,000, 12,000 tons as soon as possible, then fund any kind of an expansion of production from there using our cash flow as much as possible. So that will, I think, be the most we can do right now to maximize shareholder value instead of trying to go all the way to 24,000 right off the bat, trying to raise $450 million. That will be very diluted.
Okay.
No matter how much debt we raise, it will still be very diluted.
Okay, so what are you currently doing? Are you just sitting around on your hands waiting for these guys to finish their diligence? Or is there anything that you can do with regards to your own optimizations of the projects to ensure it doesn't fall over at the last minute?
Yeah, no, we absolutely, it's not sitting idle for sure. So, there are some COVID restrictions in Salta, but we can operate. So we can still operate in shifts. So not only have we been running our pilot operations, I think I mentioned last time, Matt, we've already completed our pilot processing plant. It's ready to go, but we've decided not to commission it because of these restrictions. We just don't want to have interruptions in the middle of the operations. So what we've been doing, we still have launched quite a bit of process work on, in the plant. In other words, we're checking our process flow sheet right now. We're connecting all the kinds of different equipment. So we're trying to make sure that the plant will actually work as designed when the time comes to commission it. And this is in addition to a full, pilot works on the evaporation pond side and liming plant and so forth. So that has been going on without any interruption whatsoever. So the plan is to launch this, what we call pilot/training plant, or commission it in the next few months as soon as the restrictions are relaxed, softened a little bit, and run it regardless of what we do with construction, because we look at it not only as pilot plan, but it's also a training plan. So that as construction is ongoing, we can actually train, obviously first hire people, but then train them so that there are no issues. They're ready to go as soon as the production starts. So all of that is happening. And luckily we have enough capital, enough cash in the bank to actually afford all of this. But also, whatever, capital we raise down the road, meaning for construction, some of it will again be committed, of course, to all the pre-development work or pre-construction work as well. But at this stage, we're probably one of the best funded companies. So that allows us actually to continuously operate, continuously improve what we've been doing, and not just sit and wait. Because that's the precious time we'd be losing. So we're in a very fortunate situation right now.
Okay, so I recognize that you have built and sold to significant companies previously. I recognize that. But these are different times. These are very different times now. What are you going to do to ensure this thing gets over the line, and when do you think that will be?
Look, I mean, first of all, I think that we will get this over the line probably by the end of the year. The first quarter next year, the latest. I think what we need to do at this point is two things, frankly. One is to really push all these financing efforts that I mentioned earlier. But the second thing, yes, I did mention that we have quite a bit of cash in the bank and we're doing quite a bit of work, but we've reduced our cash burn dramatically. So the cash that we have in the bank will allow us to go on for the next 2-3 years without actually raising any further capital in the market or from anywhere. And that is, I think, critical because, again, one thing is what I'm shooting for, what I'm targeting. The other thing is what if, you have delays, COVID, for example, was completely unexpected. There may be some other, company-specific or region-specific delays and so forth. So we want to make sure that we will stay afloat regardless of that. So we're being very strategic with our cash. We've been really preserving and very effectively and efficiently in the last few months, especially. So I think those two things, one is, working your tail off, making sure that you can put the whole, financing structure together as soon as possible and preserving as much as cash as possible will probably make this work. I mean, that's what we've done in the past. We've been very miserly with our cash and thinking, the strategical long term. And last time when we were in potash business, we were very similar to this situation, Matt, where we basically were caught on the tail end of potash industry, but we still did very, very well compared to almost any other peer at the time. So we actually exited through a sale, through an M&A, whereas we, in one of the worst markets, potash markets in history, we still fetched 50% premium to the stock price at the time. So that's the plan. But I think the real fundamental value or the advantage of the project, besides the management's experience and skills, of course, the cost structure, the fundamentals, the technical and the financial fundamentals of the project itself.
Okay, it's been a tough year. You got a few things to get over the line before the end of this year, by the sounds of it. But look, stay in touch. Let us know how you're getting on with all of these things. I don't think there's much more to do in your case. Just need that lithium market recovery. We need to know you can get this financing over the line, and hopefully, technically, no issues. So, stay in touch.
All right. Thanks a lot, Matt. Good talking to you.